$277 billion. That is the total amount of AI infrastructure investment committed at a single summit in India last month. Let that sink in. $277 billion. Not over a decade, over 5 to 7 years. We are witnessing what might be the largest concentrated technology investment push in the history of any emerging market. I'm Alex.
And I'm Maya. Welcome back to Asia Tech Macro. Okay, Alex, I have to say, when I first saw that number, I thought it was a typo. $277 billion committed at the India AI Impact Summit in February 2026. That's more than the GDP of some countries.
It's not a typo. And what makes this truly remarkable is that this isn't just government promises. These are commitments from the biggest names in global tech. You've got Mukesh Ambani's Reliance announcing $110 billion over 7 years. Gautam Adani pledging $100 billion for renewable-powered AI data centers by 2035. Microsoft reiterating its $17.5 billion India commitment. Google firming up $15 billion for a data center hub in southern India. These are staggering numbers.
And this is all happening against the backdrop of what could be India's biggest IPO ever. Reliance Jio Platforms is targeting a listing in the first half of 2026, with valuations ranging from $170 to $180 billion. Jefferies pegged it at about $180 billion back in November. That would make it one of the largest IPOs globally, not just in India.
Right. So here's the context that makes all of this even more significant. India's equity capital markets have been on an absolute tear. The country now commands 20% of all Asia-Pacific ECM volumes, up from an average of 9% between 2019 and 2023. That's more than doubling its share in 5 years. The National Stock Exchange of India is set to rank in the top 3 globally by number of new listings. This isn't a bubble. This is a structural shift in where global capital is flowing.
I was just reading this morning that India's IT Minister, Ashwini Vaishnaw, announced at the summit that India will scale from 38,000 GPUs to 58,000 GPUs, adding 20,000 in a matter of weeks. And this is just the government's compute infrastructure. The private sector numbers are even more mind-blowing.
Exactly. Yada Data Services, which controls 60 to 70% of India's total GPU capacity, announced a $2 billion AI hub with NVIDIA. They've deployed nearly 10,000 GPUs in just 2 years. And Larsen & Toubro is building India's largest gigawatt-scale AI factory using NVIDIA's infrastructure, with GPU clusters in Chennai and Mumbai. The scale of GPU deployment happening in India right now is unprecedented for an emerging market.
So let me make sure I understand the full picture here. You have the government rolling out tax incentives, state-backed venture capital, and policy support to attract AI investment. You have the 2 richest men in India, Ambani and Adani, committing a combined $210 billion. And you have big tech piling in with their own billions. What's driving this convergence?
3 things. First, India has 500 million plus smartphone users and a massive digital infrastructure built on top of Jio's 4G and 5G networks. That's an AI application layer that no other emerging market can match. Second, India produces more software engineers than any country outside the US. The talent pipeline is there. And third, geopolitics. Every major tech company is looking for a China plus one strategy, and India is the obvious beneficiary. When you combine the market size, the talent, and the geopolitical tailwind, you get this kind of capital tsunami.
That's a great framing, and I think the timing matters too. This isn't happening in a vacuum. China's tech crackdown pushed a lot of venture capital and private equity toward India over the past 3 years. The country received over $42 billion in foreign direct investment in the tech sector in fiscal year 2025 alone. That's up from about $28 billion just 3 years earlier. So there was already a structural shift underway, and the AI summit just supercharged it.
Exactly right. And there's another factor people overlook. India's regulatory environment has actually improved dramatically. The production-linked incentive scheme, which has been running since 2021, has attracted Apple, Samsung, and dozens of other electronics manufacturers. The government learned from that playbook and is now applying it to AI. Tax holidays for data center operators, fast-tracked environmental clearances, special economic zones for AI infrastructure. They're removing friction at a pace we haven't seen from Delhi before.
That's a great framing. But I want to dig into whether these numbers are real or aspirational, because we've seen big investment pledges before that never fully materialized.
That's the right question, Maya, and I think we need to separate the signal from the noise. Let's start with Reliance, because that's the most credible commitment. Ambani isn't just making a pledge, he's backing it with Jio's existing infrastructure. Jio already has over 500 million users. It already operates one of the largest 5G networks in the world. The $110 billion is about layering AI on top of that existing digital backbone. Data centers, edge computing, AI model deployment, this isn't starting from scratch.
And the Geo IPO itself is a huge signal of confidence. They're planning to offload just 2.5% of the company, which would still raise about $4 billion. That would make it the biggest IPO in Indian history. The fact that they're only selling 2.5% tells you Ambani believes the long-term value is much higher than even $180 billion.
Correct. And here's what most people are missing. The Geo IPO isn't just a telecom listing. Geo Platforms houses the entire digital ecosystem: mobile services, broadband, digital apps, AI infrastructure. When you buy Geo, you're buying India's digital rails. It's more comparable to a combination of AT&T, AWS, and a fintech platform all rolled into one.
Okay, but devil's advocate here. What about Adani? His track record with massive pledges is, let's say, more complicated. The Hindenburg report was only 3 years ago. How much credibility does a $100 billion AI pledge carry?
Fair point. But here's what's different this time. Adani isn't going solo. Adani Connex is a joint venture with Edge Connex, a global data center operator. They already have 2 gigawatts of operational capacity, and they're scaling to 5. And critically, they've locked in partnerships with Google for a gigawatt-scale AI data center campus in Visakhapatnam, with Microsoft for campuses in Hyderabad and Pune, and with Flipkart for AI-focused facilities. These aren't aspirational memorandums. These are construction-ready deals with Tier 1 counterparts.
That's actually pretty compelling. And the renewable energy angle is fascinating. Adani is committing $55 billion separately to expand renewable generation and battery storage, including the 30-gigawatt Kavda solar project in Gujarat. So these AI data centers would be powered by renewables from day one. That addresses the biggest criticism of the global data center boom.
Exactly. And this brings us to the broader ripple effect. Microsoft's $17.5 billion for India is part of their $50 billion Global South investment plan through 2030. Google's $15 billion for a South India data center hub represents their single largest commitment in any emerging market. NVIDIA is working with multiple Indian partners simultaneously. The signal here is that big tech views India not just as a market, but as a strategic compute hub.
Wait, really? A compute hub? I mean, India has traditionally been the back office. Software services, BPO, IT outsourcing. Are you saying that's fundamentally changing?
That's exactly what I'm saying, and the numbers prove it. India's data center capacity has grown from about 800 megawatts in 2022 to over 2,000 megawatts today. By 2028, industry projections suggest it could reach 8,000 to 10,000 megawatts. That's a 5-fold increase in 6 years. India is transitioning from a services economy to an infrastructure economy, at least in the tech sector.
And this creates a completely different investment thesis for India. You're not just buying cheap labor and outsourcing. You're buying into the physical layer of AI. The GPUs, the power plants, the fiber networks, the cooling systems. This is heavy infrastructure investment.
Right. And what's particularly interesting is the talent angle. India produces over 1.5 million engineering graduates every year. TCS just announced a partnership with OpenAI at the summit. Infosys is building AI-native services on top of these new data centers. The traditional IT services giants are pivoting from body shopping to AI platform services. That's a much higher margin business.
And it's not just the big names. I've been tracking the mid-cap Indian tech space, and there's a whole ecosystem emerging. Companies like MapMyIndia for spatial AI, Nazara Technologies for gaming AI, and Tata Amexi for automotive AI. The breadth of the AI opportunity in India goes way beyond just data centers and cloud.
That's a critical observation. And let me add one more data point. India's startup ecosystem produced over 100 AI-focused startups in 2025 alone, according to NASSCOM. The total number of AI startups in India has crossed 3,000. Not all of them will survive, obviously, but the sheer volume of experimentation creates a Darwinian ecosystem where the best ideas survive and scale on top of this new infrastructure.
So the question I keep coming back to is, can India actually absorb all this capital? $277 billion is enormous. Is there enough power, enough land, enough regulatory capacity to make this happen?
And that, Maya, is where we get to the contrarian corner. Because the consensus right now is overwhelmingly bullish on India's AI story. Every analyst note I've read in the last month says India is the next AI superpower. And when everyone agrees on something, that's usually when I start getting nervous.
I knew this was coming. Okay, hit me with the bear case. Why might India's $277 billion AI dream not work out?
Let me give you 3 structural risks that nobody is talking about. First, power. India already faces chronic electricity shortages. In 2025, the country had a peak power deficit of about 2%. That doesn't sound like a lot, but when you're adding 8,000 megawatts of data center capacity, which is roughly equivalent to 8 nuclear power plants, the grid can't handle it. Adani's renewable plan sounds great on paper, but solar and wind are intermittent. You need base load power for data centers, 24/7, 365 days. And India's coal plants are already running at near maximum capacity.
That's a really good point. I was just looking at the numbers for Malaysia and Southeast Asia, where they're hitting the exact same wall. Water shortages, grid strain. Is India going to face the same problems?
Worse, potentially, because India's water stress is far more severe. Data centers require massive amounts of water for cooling, and India is already one of the most water-stressed countries on Earth. 13 out of 20 major Indian cities are projected to face severe water shortages by 2030. Building 5 gigawatts of data center capacity in a country with these constraints is, well, let me rephrase that. It's ambitious, to say the least.
Okay, so power and water are constraint number 1. What's the second risk?
The concentration of capital in 2 conglomerates, Reliance and Adani, together account for $210 billion of the $277 billion in commitments. That's 76% of total AI investment in India, controlled by 2 groups. Both are family-controlled conglomerates with complex cross-holdings. If either one faces financial stress, a regulatory crackdown, or governance issues, the entire AI infrastructure build-out gets destabilized. We saw what happened with Adani after Hindenburg. Imagine that happening in the middle of a $100 billion construction program.
That's the thing that keeps me up at night. It's like India's AI future is basically a 2-man bet. If Ambani and Adani deliver, India becomes an AI superpower. If they stumble, the whole thing collapses. That's an incredibly fragile structure for what's supposed to be a national strategic initiative.
Exactly. And here's risk number 3, which is more subtle: the talent drain paradox. Yes, India produces 1.5 million engineers a year, but the best ones leave. IIT graduates disproportionately end up at Google, Meta, and Microsoft in the US. India is essentially subsidizing the training of Silicon Valley's workforce. Until India can retain its top-tier AI talent domestically, it will always be a compute substrate, not an AI innovator.
Wait, that's actually a really sharp observation. So India might end up like the Gulf states, building massive infrastructure that's operated by foreign companies for foreign benefit?
That's the risk. Adani builds the data centers. Google and Microsoft fill them with their own workloads. The compute happens in India, but the IP, the models, the applications, the value capture, all of that flows back to Silicon Valley. India becomes a landlord, not an owner, and landlords capture a fraction of the value.
But isn't Jio different? Ambani has always been about owning the entire stack. He built the telecom network, then the apps on top of it, then the payment systems. Wouldn't Jio's AI play follow the same playbook?
That's the bull case for Jio specifically. Ambani understands vertical integration better than almost anyone in Asia. If Jio can build AI models trained on Indian languages, Indian consumer behavior, Indian market data, and deploy them across 500 million users on its own network, that's genuinely differentiated. That's not a landlord play, that's a platform play. But it requires Jio to become an AI company, not just an infrastructure company, and that's a very different capability.
That's a really nuanced point. I think the comparison to China's internet era is instructive. China had Alibaba, Tencent, Baidu, all homegrown platforms built on top of infrastructure that China controlled. India doesn't have an AI equivalent yet. There's no Indian OpenAI, no Indian Anthropic. The foundational models are all American or Chinese.
Exactly. And that's the billion-dollar question, almost literally. Can India develop sovereign AI capabilities, or will it remain dependent on imported models from OpenAI, Google, and Meta? The India AI mission has allocated about $1.5 billion for developing indigenous AI models. That sounds like a lot until you compare it to the hundreds of billions being spent on infrastructure. There's a massive mismatch between the hardware investment and the software and research investment. You need both for true AI sovereignty.
So the question for our listeners is, when you look at India's AI boom, are you investing in infrastructure or innovation? Because those are 2 very different bets with very different return profiles.
All right, Maya, let's bring this home with some action items. Because whether you're a professional investor or a tech executive, India's AI supercycle is something you need to position for. And I want to give 3 concrete actions based on everything we've discussed today.
Let's do it. Action item number 1.
Number 1, watch the Jio IPO like a hawk.
This is potentially the most important IPO in Asian tech history. Geo Platforms at $170 to $180 billion valuation with 500 million plus users and a full-stack digital ecosystem, this is a one-of-a-kind asset. But the 2.5% float means liquidity will be extremely tight. The IPO price and the post-IPO trading pattern will tell you everything about global appetite for India risk. If Geo prices at the top of the range and trades up 20% on day one, that's your signal that the India AI supercycle is real and has institutional backing. If it struggles, that tells you the smart money has doubts.
That's really practical advice. And for people who can't participate in the IPO directly, what's the play?
The indirect play is through India's IT services giants, Infosys, TCS, Wipro, HCL Tech. These companies are pivoting from traditional IT outsourcing to AI platform services. TCS's partnership with OpenAI is a perfect example. They're not just building chatbots, they're embedding AI into enterprise workflows for their Fortune 500 clients. If the India AI infrastructure build-out succeeds, these companies are the picks and shovels of the Indian AI gold rush. They trade at much more reasonable valuations than Geo will.
Love it. Action item number 2.
Number 2, track the power and water bottleneck closely. This is the single biggest execution risk for India's AI ambitions. Monitor Adani Green Energy's capacity additions, especially the Kavda project timeline. Watch for any regulatory actions around water usage for data centers in water-stressed regions, and pay attention to India's power deficit numbers, which are published monthly. If the power deficit starts widening beyond 3% while data center construction accelerates, that's a red flag. It means demand is outpacing infrastructure, and some of those $277 billion in commitments will need to be delayed or rescaled.
And I'd add to that, watch for policy responses. If the Indian government starts imposing data center moratoriums like Singapore did in 2019, that completely changes the investment math. The regulatory environment is a leading indicator.
Great point. And action item number 3, think about India as a portfolio diversifier, not a replacement for China. A lot of investors are framing India as a China replacement. That's wrong. India's per capita GDP is still $2,500 versus China's $13,000. The consumer market is structurally different. India's AI story is primarily an infrastructure and services play, not a consumption play like China was. So if you're allocating to India, size it appropriately. 5 to 10% of your Asia allocation is reasonable. Don't go all in just because the headlines are exciting.
That's really important nuance. I think a lot of people get caught up in the $277 billion number and forget that India is still fundamentally an emerging market with emerging market risks. Currency volatility, regulatory unpredictability, infrastructure constraints. All of those are real.
Absolutely. And here's the takeaway I want listeners to walk away with. India's AI supercycle is real. The capital commitments are unprecedented. The government support is genuine. The talent pipeline exists. But the gap between commitment and execution in India has historically been enormous. The country that built the world's cheapest 4G network might also build the world's cheapest AI infrastructure, but it's going to take a decade, not 5 years. Be patient, be selective, and above all, focus on the companies that are building vertically integrated AI stacks, because those are the ones that will capture the real value.
That's a fantastic summary. So to recap, Geo IPO as a bellwether, power and water as the key risk indicators, and India as a diversifier, not a replacement. This is one of the most important stories in global tech right now.
No question. And coming up next, we'll be diving into the semiconductor supply chain shakeup as TSMC's Arizona fab hits full production and what that means for Asian chip dominance. You won't want to miss that one.
Can't wait. Thanks for listening, everyone.
Stay data-driven. Bye.